Okay, I'm putting this clip towards the start of the video. The next couple minutes, I went on a big tangent about life and all that type of stuff. Click this timestamp here if you want to skip forward. At the same time, if you want to stick around, I'm talking about life and that type of stuff. Some of you may be interested in that, but anyways, to each their own. Welcome back. My name is Arya, and I don't waste your time, is usually what I say, but not in today's video. It's a much more relaxed, laid back video. So usually I have a couple bullet points that I want to hit with the video. In today's video, we're just going to be going through basically the portfolio updates that I've been doing over on Twitter, which, by the way, if you didn't know, I always pin the most current version of my portfolio, completely full transparency, all that good stuff, pinned at the top of my Twitter page. And it's quote tweeted. So you could look at the one before that and then the one before that, and you could just keep going down the rabbit hole. So that's kind of what I want to do in today's video. I have with me some Maynards, so we'll chew back on a couple of these and kind of go through this. First and foremost, I started YouTube earlier in March, and maybe we'll start with this. So maybe we just do a whole reflection video. How about that? But anyways, I started YouTube March of this year, March 23rd or something like that. I had uploaded videos in the past, but I started seriously taking it, uploading like around once a week. And it has been an interesting experience because I never thought I would be the type of person to, at least to some degree, like build a following and like engage with essentially random strangers online and all this other stuff. So it's been interesting. I've said this before and I'll say it again. Like, I really do believe like there's something that every single one of you watching right now, it doesn't have to be investments. You might be good at cooking. You might be excellent at playing the guitar, whatever it is. Like, there's something that even like you might be really into Star Wars, for example, right? Like, if you're genuinely passionate about that one thing, odds are the rest of the world is also interested in it. Like, as long as you make YouTube videos with like half decent production quality, don't waste people's time, kind of hit the bullet points, all that type of stuff, you should do okay. Like, if you're going to talk about Star Wars movies, keep it to the point, talk about Star Wars movies, figure out lighting to some extent, right? People, I actually learned this in the restaurant when I used to work in a restaurant. The person that was teaching me, he kept telling me people eat with their eyes, in the sense of like, the food, as long as it looks good, intuitively they'll think it tastes good as well. It could taste really good, but as long as it's not presented well and all that type of stuff, the customer won't intuitively be happy with the total experience. So similar thing with YouTube. Like, if the video, the audio quality, all that type of stuff looks pretty good. Although I think I was toying with my mic a second ago, so I'm sorry if that messed up in the audio, whatever. Going on a really wide tangent here, but anyways. Okay, I'm putting this clip towards the start of the video. The next couple minutes, I went on a big tangent about life and all that type of stuff. Click this timestamp here if you want to skip forward. At the same time, if you want to stick around, I'm talking about life and that type of stuff. Some of you may be interested in that, but anyways, to each their own. Going back to it. Same thing goes with YouTube. Like, you might be interested in Star Wars, playing guitar, whatever the case is. I genuinely do believe, and it doesn't take too much time away from like your job and all that type of stuff. I'm a generally busy person. Of course, I'm like college student, balancing work and all that type of stuff, but still, I think there's a good amount of free time. And as long as you're like working on your passion, like, it wouldn't even feel like work. Like, you're doing something fun. You know what I mean? So I genuinely do believe like all of you watching this should be doing social media to some extent. It's fun. Eventually, you'll be able to monetize it, make money off of it. Obviously, that's the reason you would do it to begin with. And in the process, you'll meet like-minded people. And perhaps that's the most important thing. I have a person for every different situation, like, because I roughly know what everybody that I DM with on Twitter or that I've met through my friend's Discord server, all that type of stuff. Like, I roughly know the jobs of all these people and like what stocks they're into. So when I need advice on something, I'll reach out to them. You know what I mean? So you kind of build this network over time. With that being said, I think it's finally time to kind of go through the portfolio updates and that type of stuff. Why should you listen to me to begin with? I am currently beating the S&P, but I'm having an issue, and you know what? I'll find the tweet. Here we go. So I tweeted this out recently where I'm like, what if I'm not a good investor and instead caught an irrational raging bull market and was weighted heavily into tech? Because I've only been investing since November 21. So to be fair, the first like 18 months of my portfolio, I was just in the red. And especially because I had Tesla and like that type of stuff, and like that really like 65-70% crash. I did geek out a very tiny profit at the end of it. but still, like I was holding through like essentially 18 months of just horrible redness, right? So I'm not sure. Like I really don't have that many years under my belt to confidently be like, oh yeah, I'm a pretty good investor. I could beat the S&P, I could beat the Nasdaq. With that being said, like I am currently beating both the Nasdaq and the S&P, right? So this is the total return of my portfolio. So like had I invested that same amount into the Nasdaq at the same time, how much would I be up on the total portfolio, right? So in my portfolio and what I've actually done, I'm up 27%. If I put it in the Nasdaq, it would be 21.5%. This is again a little bit flawed because this is total return. It doesn't take into factor like the time weightedness of it. It doesn't annualize it. Like, and then with the IRR here, this takes into account time, I'm pretty sure. So, but still, with that, I'm also beating it. However you flip it, I think I'm confidently beating it just purely from like weighting Salesforce at 30%. I mean, Amazon's up, what, like 50% year to date? So that also helps. Like, there you go, like 65-70% of my portfolio the past year is up 50 or 60%. You know what I mean? Like, just those two alone, like, I've done pretty well. At the same time, like, I've had the other 30, funnily enough, the other 30% of the portfolio not do too well. But anyways, point is beating the S&P right now. I'm not sure like if I will in the future. I'm confident though, like with the current construction of the portfolio, like they'll be able to probably maintain their multiples and be able to grow at like 15 to 20% in the future. Naturally, that should lead to outperformance over the S&P just because the S&P grows slower than my portfolio. Just that simply, you know what I mean? And actually, now that I think about it, there's this chart that I keep referencing. So the biggest drivers of long-term stock performance growth. This is a little bit dated though. So this, sorry, I'm kind of blocking it here. But yeah, this was only in like the 19-year period of 1990 to 2009. So very small, I guess you could call data on this stuff. And like, obviously it's been about 15 years since. So the stocks that we have today are definitely, they're definitely different. Like Meta hadn't even IPO'd at this point. Some of the big companies today were not as big, right? But nonetheless, like the number shouldn't be too far off. And like the main takeaway from this is that in the long term, the single biggest determiner of stock performance is revenue growth. And it intuitively makes sense because revenue growth would naturally flow down to net income growth or free cash flow growth, which those are technically the key drivers of long-term growth. But you can't have free cash flow growth if you don't have a growing top line to begin with, unless you have margin expansion. But like over a decade period, there's only so much margin expansion you could do. You could look at, for example, Microsoft as a case of this, or sorry, not Microsoft, McDonald's as a case of this, right? So they switched from a model of franchising, or sorry, from corporate-owned stores. Well, they always franchise, but like from having like mostly a good amount of corporate-owned stores to just purely being franchised, right? So, and then now they break out the difference of operating and total revenues, which are, it seems they're very similar numbers. I'm not sure why. And then if you, for example, toggle on the revenue, you can see like the revenue has been flat for a decade, right? So unimpressive to begin with, but then you flow down to operating income and you take a look at that and you see the operating income has been growing. It's been growing, right? Like it's not a crazy amount of operating income. Maybe if we just do operating margin, maybe that would kind of, oh wow, okay, so there you go. This is what I was trying to get at. So okay, the operating margins have expanded beautifully, and it's sitting at 4. So this is better operating margins than Meta. I think Meta is at like 45%. So you have like an advertising business that what are they even selling to you at that point, right? Like what is the costs of making those advertisements? Like it's literally just how many employees you hire. Like that's the expenses you have, right? That business competing with essentially a restaurant, they have the same margin. How is that possible? Of course, because McDonald's doesn't even own the stores. They just license you the name, the brand, essentially give you the blueprint of making that business, right? As I'm doing this, I'm kind of thinking like rambling about investments and just titling it something like that. Okay, going back to the YouTube thing, like I kind of built the brand of like I don't waste your time. So I always feel obligated to at least tell the truth to a certain extent or try to be as honest as possible. But then, with the way YouTube is, like you kind of have to balance the two of like, okay, you definitely want to have truthful claims in your title, your video, thumbnail, all that type of stuff. But at the same time, like you have to put something where you only have a few split seconds of somebody reading your thumbnail and somebody reading your title, right? So in those few split seconds, if it's way too truthful, or like you pose a question but you also answer that question, like they're just gonna scroll right through it, right? So if I, for example, or if it even just sounds boring, like if I say rambling about investments, that's too vague, like nobody's gonna click on that. Or TSM is the best stock to buy for 2025. Again, like a bunch of people might be like, oh, I'm not interested in TSM. Just click away from that, right? Like, so you kind of have to curate it and be like, the best AI stock in 2025, right? But then you fall into like AI carries a bad stigma on social media now from being this like overhyped thing, whatever the case is. So the interesting thoughts of me as a creator. Anyways, let's talk about the portfolio. I do think in the future I'll be able to outperform. I'm currently outperforming, but it's only been a couple years. These businesses, they grow faster than the S&P. I do plan to hold most of them for probably like I think Google and Amazon are extremely safe for decade holds. I really don't think, just purely because they're cloud businesses, right? Like I don't think anything will mess with the two cloud businesses as long as the cloud is growing comfortably. And even if it goes in a slowdown, we saw in the 2022 period, it did go into a slowdown. The Amazon hit, I think, single digit revenue growth rate. It's back above 20%. It's at almost 40% operating margin now, right? So like, even when they're down, they're never out. You know what I mean? Like they they can reaccelerate. It's just purely dependent on the infrastructure needs of the world, which are, it goes through cycles, which I'll maybe show that later on, just because I don't want to spend too much time on charts and whatnot. So those two, 100% like easily decade holds. ASML in the next 3, 4, 5 years, sure, something could derail it. No, honestly, not even 5 years. In the next 2 years, something could derail it. Anything beyond the next 2 years, I don't think there's any macro event, nothing, unless it's like a black swan, but nothing could really hinder the performance of that business. It's going to make EUV machines in higher quantity, and their customers will be buying them. It's honestly as close of a guarantee as you could get in the investment market, in investing, is ASML continuing to perform well. I think that's one of the most sure bets in, well, I say that, and then MasterCard is sitting right there as well. So arguably MasterCard is like, people will spend on their cards, yes. Right? Like, so now that I kind of think of it, actually, most of these holdings I'm fine with holding for like a decade. I think MasterCard, ASML, Google, Amazon, and then Salesforce really depends, and I've been wanting to talk about this on a YouTube video. It really depends on if they can reaccelerate that top line. Again, going back to the charts, if I have a business growing revenues at 8%, that's a bit of a problem for me, because eventually they're going to hit 30% operating margins. And for a SaaS business, 30% operating margins is about where it caps out, unless your name is Microsoft and Adobe. So other than those two, which I don't think Salesforce will eventually reach those levels, like maybe super, super mature, like, I don't know, 15, 20 years down the line, maybe. But in the next, call it 5 years, I don't think they could go above 35% operating margins. I might be wrong. I don't know. But I don't even think they could make it past 30%, let alone 35, right? And so when you get there, is like, you kind of run out of ways to grow your bottom line. So you have this 8% base revenue growth, put a 3% buyback on that, which, like, that's an aggressive buyback. That's where Apple was a little bit ago. That's where Google is today. Like, those are pretty big, sizable buybacks, which I guess Salesforce will eventually copy. I don't know. Even at that point, like, you're growing your EPS and free cash flow at 11, 12%. It just doesn't cut it for me. You know what I mean? I have Google sitting right there, just as good as a company, also in like software, tech, all that type of stuff. Why wouldn't I just put that money there? I have Amazon sitting right there, right? So like, and the multiple is realistically in the long term negligible. Why wouldn't I move the money there, right? So with Salesforce, I'm watching it closely, very close to my heart, because I made the call 7 months ago, May 30th, and it turned out very, very correct, right? So it's definitely a business I love, but like, either it continues to, and it's a pretty steep valuation today as well. So there's a point where, like, if the valuation continues going up just because of this moat and big AI company, all this narrative and all that type of stuff, rotation into software, return on AI in software, I'll be like, I'm very unemotional with this. Like, if I see there's a outstanding opportunity in front of me, I'll easily trim. I'm very unemotional about this. Like, I'm not too worried about I have too much turnover this year and all. I'm gonna make the best decision at that time to make the most amount of money every single time, regardless of like what somebody in the comments might say or any of that type of stuff. And actually, Matt Darren, which is one of the YouTubers who I very much admire, probably my favorite finance YouTuber, if anything, he did a video recently saying on a book, actually, Thinking in Bets. And he was saying like life is kind of like poker. Like I believe it's poker, where you kind of think in bets of like percentage bets of what's the odds that this person flips over their card and it's like an ace or whatever the case is, and like, are you okay with taking that loss? Are you okay with risking your hand to possibly win or whatever the case is? And I think investing actually, there's a good amount of duality between the two. Whereby, yeah, in investing, you have two options right now. Like, you could sell some Salesforce and put it into Uber, and odds are Uber outperforms Salesforce at today's price. So what's stopping you, right? Is it a tax implication? And you kind of weigh these two things and think in bets. So I thought that was a very well done video, and honestly, it kind of resonates with me. Like, I do have to think in bets. Anyways, let's just go down one level. With this portfolio update, okay, so this is the one where I trimmed a third of my Salesforce, which it was coming up close to 34-35%. It was a bigger position than Amazon at one point. So I trimmed a third of that. I put it 9% into Uber right away. I opened the position. I bought in two increments. So I bought in the morning at like, I want to say like 67 or something. Maybe I wrote it in here. All right, I bought at like $67 or something, and then I bought at the end of the day at 65. And then I also put like 1% into TMDX. I've yet to make a video on that. I really should. It's a great company, thinking in bets, right? So it's a small speculative position that I think will do well in the future. Beaten down stock. It's down like 65-70%, whatever. This one, oh, I did this one saying Salesforce became bigger than Amazon. So that was a fun moment because I haven't added to Amazon since February. Salesforce, obviously, I bought the dip heavily. And then you got your Google at 16%. Honestly, portfolio hasn't changed much since then. Let's see this one. Again, doesn't seem like much. Why do I even do an update? Oh, I think this one I bumped up some ASML, is it? I would like to keep my position set. Let's say ASML takes a nosedive. Yeah, I don't know. What's this one? This is probably the one where I bought some ASML. Oh, also, I had somebody ask me recently, like, why do I sometimes put cash in, sometimes I don't put cash in? It's just very difficult to keep track of because this isn't cash in my brokerage. This is cash in my, not just one checking account, but like spread over checking accounts. And like, I have some cash in Wise, the payment app, and all that type of stuff. I have some that I've yet to receive. I have some that, like, all this stuff, right? So it's kind of difficult to keep track of. So honestly, I stopped tracking it, to be honest. It's just whatever's in my checking and all that type of stuff. And when I'm comfortable with being able to put some money into the brokerage, I put it in the brokerage, and usually right away I just buy something, or I kind of scrape together a little bit of money here and there, to kind of get rid of the itch of like for example, I don't know, a couple of weeks ago I was like itching to buy some more Uber, or I don't know, it was 2 weeks ago. I was itching to buy more Uber, so scraped together some money and just bought some more Uber. In this one, I bought some Google. I just love how this portfolio looks, to be honest with you, because right now I have TMDX at like 2%, and it's honestly kind of an eyesore. Like, here, let's just take a look at it. Finchat.io, by the way, ladies and gentlemen, the only sort of sponsorship or affiliates that I have on the channel. But yeah, you see, like, I have what, two more holdings now, TMDX and Uber, and it just, like, it looks so clean when there's only like, what is this, 5 names? I'm investing tens of thousands of dollars based off of how it looks on a Finchat chart. Brilliant. Over here, sold Uber and bought. Oh, look at this! Look at this! Sold Uber at $71 and added to it at Google at 148 per share, September 18th. I wouldn't be surprised if Uber outperforms Google in the future. Well, that did not, no. It's a smaller business growing faster, albeit the valuation reflects that. Well, the valuation's arguably cheaper now. I still think Uber is a rock solid business, but frankly, I wasn't comfortable upping it in the portfolio. Well, actually, I did. Okay, so this is such an interesting. This is why I wanted to do this video, because we're gonna come across stuff like this, right? So this is September 18th, only, I don't know, 3 and a little bit months old. And at that time, I hadn't done enough research to be comfortable with Uber at like a 10% position. Over the past couple months, I've really, really just went in on the numbers, on the research, on like base cases, and essentially why it's going to just grow at like 15-16% revenues for quite a while, right? And that should, with margin expansion, translate to like 30% plus free cash flow and EPS growth. So yeah, at the time, I hadn't done my homework. I still looked into the company to obviously buy it at 2%. I hadn't done my homework like that well. Yeah, I consistently new cash, diligently looking to add to ASML. What else is here? Oh, after buying and holding Paycom for about, this is aged horribly as well. So this is a problem. This is another problem I have is my picks are correct. Like I pick the right businesses. My analysis upfront is very correct, but I consistently have problems with patience and going back to earlier of like trying to think in bets and like maximize the money I make. Like I'm not sure when I'm being impatient and when I'm actually like I see the opportunity in front of me and yeah, actually that was the better opportunity at the time, right? So I never liked Paycom that much just because it's a little bit outside of my circle of competence, not in the sense of like I don't understand the business. I do. It's my biggest issue was it was a mid cap company and I just didn't think it has like I never invested that way. I don't have experience investing in mid cap software companies. I thought like if something comes out and like I don't know, like they get competed away and all that type of stuff, I'd be kicking myself over it. Obviously, the stock has done well since, partly driven by fundamentals, but anyhow, live and learn. But basically, I was just thinking like I'm very confident in the future of Google. I'm not as confident in the future of Paycom. Like it's kind of an unknown-ish business. It's a little bit abstract, a little bit lower certainty for me. You know what I mean? And so yeah, I sold it and I bought Google at 160 and 155. So Google's done okay since. I think Paycom's up like 40% since. So in hindsight, in the past, what was it, September 6th? Wow. So yeah, in the past almost 4 months, it would have been the better decision to keep Paycom, obviously. Oh, and then this is a chart. I've been posting this chart. I love Finchat so much, but it's for stuff like this. Like it has this type of data that you could kind of look at, right? So this is your free cash flow divided by operating cash flow, and it shows you how much of operating cash flow gets converted into free cash flow, right? It's pretty straightforward. And like you could just toggle this out. Like it's kind of abstract. People only ever pull up the free cash flow chart for Google, and they're like some people, some YouTubers, Twitter people, some of them they do this. They pull up the free cash flow, or better yet, the free cash flow per share chart, and they're like, take a look at this. Oh, free cash flow hasn't grown in 3 years. Look at it. 2021, they did 67 billion. Right now, they've only done 55 in the past. What's going on? What? Horrible. Obviously, the stock hasn't moved. Well, the stock moved now, made new all-time highs, but obviously the stock hasn't moved in 3 years. It's because look at the free cash flow. That fails to take into consideration two things. One, they had a one-time tax event that happened in the Q4 here. This is supposed to normalize literally this next quarter. So we'll see. I think this next quarter you'll see like the free cash flow is like abnormally high compared to all the other quarters, right? So there's that thing that's going on. And then two, when you're looking at this again, it doesn't take when you're looking at the free cash flow chart, it doesn't take into consideration the capex cycles, right? So you're looking at this and like there's multiple periods where the free cash flow of Google does not grow, and then oh okay, all of a sudden just big growth spurt, whatever. Again, multiple years of minimal growth, and then it's a very advertising, very cyclical business, but nobody ever talks about that. I actually think part of the reason why Meta and Google on a PE basis always trade at such cheap prices actually has to do with the cyclicality. Investors naturally put a little bit more of a lower bid on Google and Meta purely from the advertising cyclicality. Again, partly due to the nature of the business and then also like the capex and whatnot, which is it's an interesting thought experiment because Apple is arguably more cyclical, but trades at double the PE, but I digress. Anyways, I love this chart. I love Finchat for making charts like this. At least on the recording thing, it says 30 minutes. I think when I cut it up, it'll be less. We'll do a couple more of these and then we'll wrap up. This one is August 16, first new position in Uber. Okay, so let's read my thoughts initially on Uber, which I've done an hour-long video explaining. Okay, so I made it. All right, I guess I don't talk about it much. Continue adding match. I'm happy. I probably like it closer to 15% as I continue to get paid for my job. Yeah, love MasterCard. Missed the boat on Adyen. I had another opportunity to buy Adyen at like 12.50 or something like that. Didn't bite. It's up 20-30% from there. So, oh yeah, so Black Monday. I don't know if you guys follow me on Twitter, you probably heard this a couple months ago, but yeah, Black Monday, because remember when the stocks crashed in August? It was on my birthday. My birthday's August 5th. Which I did nothing. I didn't even look at my brokerage. It was my birthday after all, right? So I was out and about. But yeah, I didn't do anything that day. I didn't buy anything. I didn't sell anything. Just held them, and then literally like a week later, like everything went back to normal. I have 7 names in the portfolio. This is what it looks like. Yeah, you had Paycom at the time. 2% in Uber, ASML at 4%, which it continued to, this was when ASML was at like over $1,000 a share, right? So, whatever. So maybe I should trim that, eh? Over here, yeah, so, okay, July 12th, I got the sponsorship with Finchat. Very nice. But if you go back in my videos, I was using Finchat in like March, April, and then privately I've been using the website since like over a year ago. So I've literally been using the website longer, and like I was a user of the website. It should really speak volumes that like it's the only affiliate, the only sponsorship on the channel, and I've denied other companies that have asked to possibly do an affiliate link or do a sponsorship and all that type of stuff. If I don't use the software, even from like if you just think of it from like, I don't know, at the end of the day, like if I do take a sponsorship on the channel, like I would be trying to essentially sell that to you, right? Particularly if I take an affiliate link, right? But if I don't use the software to begin with, I don't know the product well enough to be able to sell that to you. But with Finchat, it's easy, no problem. I use it every day to begin with, like just genuinely just to do stock research for myself. And then on top of that, as a content creator, I'm consistently like just playing around with the charts just to find something interesting. That's literally, I probably do that. Like obviously if I don't have like exams going on or like I'm in a less busy period of my life, I will literally pull up the Finchat website and just play around with the charts. And I'm like, oh, interesting. Pepsi makes more money from chips than they do soda. I'll tweet that, right? Like I'm consistently looking for stuff like that. Where I'm like, oh, just earlier today, like I was just messing around. I'm like, you know what's going on with Alibaba? I'm like messing around with the charts, and then all of a sudden I find out, oh look, revenue is reaccelerating, right? I don't pull up Alibaba financials. Excuse me. I don't pull up Alibaba financials all that often, right? So when I do, like I'm surprised to find stuff like that. I don't even follow the stock, right? So anyways, that's that. I genuinely use the software. It's great software. Which, by the way, I should mention, top link in the description. I would literally just, if you click that link and you sign in with your email, or like sign up with your email to the website, by the way, like it's not like a newsletter or anything like that. But if you sign up, you literally get 2 weeks for free. So I would just do that. And as a, like, it's a very broad, big website, lots of tabs and all that type of stuff. Like I was personally, when I first started using it, like, I don't know where everything is, but you get 2 weeks free. And it's you don't have to put any credit card information and none of that type of stuff. It's literally, you just, with your Gmail or your email thing, you just click login, whatever, and it goes through. Takes, I don't know, max 5-6 clicks, and you get 2 weeks for free. And I would just play around with it. Like you'll kind of understand what I'm saying of like, this is genuinely great software. I digress. We love Finchat. Let's do this one because pretty strong words going on here. So this is what I was saying. Salesforce, please go back and scroll through my page. The week of CRM earnings around May 30th to June 11th. I was quite literally pounding the table. Every single tweet, I was just like, this is ridiculous. What are we even, like, do you guys see are we talking about the same company here? And there's so many big, I know Amit, like he was one of the big sort of guys that was consistently tweeting about this, saying like essentially it's dead and all this stuff. I don't know, ridiculous stuff. How as soon as price moves, and you're kind of seeing this with Uber now, as soon as price moves a certain direction, 20-30%, sentiment swings like absurd, right? I've seen that play time and time and time again. Nobody ever learns. Except for me, because I end up investing in these companies. And I guess I'll read you guys this. I think I wrote this on May 3rd. No, I wrote this June 2nd. So I said these words June 2nd. The stock was around 230 when I said this, right? I said, and I had SCHG at the time, the ETF. So I've always done this. I use it as I call it a delayed cash position. So when I have absolutely no ideas of where to put money, I'll just leave it in the ETF. So I get market exposure up or down, right? While I figure out where to actually put that money to work. It's just something I do. We've been in a crazy bull market, so as long as like I've held it for like a month, it usually makes, I don't know, a couple percent, right? Better than having it in a treasury, basically. So this is what I said again, June 2nd, the stock was at $230 a share. I said, I use SCHG as a delayed cash position to have my money in the market while I find an opportunity that I really like, such as CRM. And so I've decided I'm going to use the last of my SCHG money, 3-4%, to buy even more Salesforce on Monday. The long-term prospects of Salesforce are still intact and the valuation is hovering around the all-time low of the company. Listen to that sentence. The long-term prospects of Salesforce are still intact and the valuation is hovering around the all-time low of the company. Completely true. Where they just missed revenues by 13%. quite literally a rounding error. Nobody ever says, oh, Salesforce revenue grew by 10.13%. Have you ever heard anyone say those words? No, they just round and say 10%, right? Quite literally a rounding error. That's what sent the stock down 20%. Ridiculous, right? So when I was kind of looking at it, of course, you saw the revenue deacceleration, which that had happened for multiple quarters in a row. So that wasn't anything new. But like the business itself, people are like the moat is still perfectly intact. There's nobody leaving Salesforce. All like the retention rate still perfectly good. So the business itself was completely fine. And then I said, I think 2 to 3 years from now, I'd be kicking myself over if I didn't buy more just because the stock went up 7% after the dip, and I got greedy about my buy-in price of 216 and fell for the age-old price anchoring bias. Cheers, guys. Great decision, right? Like, did it matter? 216, 230? The stock's at 360 now, right? Like, I made money on both those buys and a ton of money, right? Oh, this is the first time Amazon went to 200. Yeah, I tripled my position in February, by the way, if you guys didn't know. At the time, it made up more than 40%, but I've consistently diluted that down over time. So even as of June, it was roughly 40% of the portfolio, but like, despite it making gains, I've consistently diluted it down with more cash into the business. Salesforce was only at 250 per share, and I was already this confident about it, by the way. So what? It's up 15% tops. Like, it's not even up that much. Oh, I still had MSCI and Evolution Gaming. Wow. Yeah, so I sold both of these. MSCI, I think it's had like identical performance to MasterCard because I sold it and I used half of it for MasterCard, and I sold Evo at 105. And I also I sold these two and I put it into MasterCard. I'm like 90% sure. This is what it kind of looked like at the time. Yeah, 40% Amazon, the Google. Nice. Anyways, my friends, thank you for watching. Thank you for honestly a great year. Like I mentioned all the way at the start of the video, if you were watching my little rant, it's been a very interesting experience to kind of do YouTube. I do expect next year to put more effort into it, particularly on the consistency of uploading and that type of stuff. Like, I'm quite an inconsistent uploader. I think this video is coming like 10 days after the last one, right? So I do want to be more consistent, maybe do like one video every 4-ish days. I think that's a great pace. And honestly, thank you for watching. Again, I do try to provide value to you in return. And I know it's cliche to say, every YouTuber says it, but genuinely do appreciate you watching the videos. Also, I want to make something like abundantly clear. Yes, I do make money off of this, and that's great. Probably the number one motivator of me doing this is just building a network of investors. That's like, honestly, to me, that's the coolest part about this, where I, like, just before I made this video, I get DMs from the viewers. And I read most of my DMs. Unless you like sound or look like a bot, I'm not going to respond to that. But I read the DMs, right? Or if you message me on Discord or whatever the case is. I just find that so interesting where somebody would reach out to me, hey, I saw this video, and then they're asking a question like about sales. What do you think about this part of the thesis? And I'm like, I talk to them and we go back and forth. And then I had Fred, let's pull him up. Fred Abyss. Here we go. This gentleman. He left me a comment months ago saying, thank you for doing this video, whatever. I'd like to buy you a coffee. And then I type him back. I'm like, I appreciate that, whatever. I'd love for you to buy me a coffee, but I feel the logistics of that would be quite difficult. How about you just tell one of your friends about the YouTube channel and we'll call it even. I appreciate that, whatever. Right? So then he follows my Twitter. Sorry, I keep tapping this mic, man. So let me show you guys. I got this mic stand, right? Can you see this? Got this mic stand. And it's helped out with the audio, right? Because so I would leave it on the desk and it was way too low, but now because it's closer to my mouth, I think the audio quality has gotten better. Apologies if it's made noise. Going back to it, Fred. So yeah, he follows me on Twitter and then DMs me on Twitter and we've become good friends. Like he consistently, we talk back and forth. We talk about Uber, all that great stuff. Like I now have a friend. You know what I mean? Like, it's cool. Not to say like I don't have friends in real life. I actually have. I don't mean to flex on you guys here, but I have a lot of friends. And I'm like a generally extroverted, outgoing person, so never been difficult for me to kind of do that type of stuff. But yeah, it's pretty cool. Like I don't have. Okay, how about this? I don't have investor friends. Like I have my best friend who also invests, but he's not like into the weeds like me in terms of like. I'm literally like memorized the financial statements of some of these businesses, right? And I'm honestly like I'm pretty extreme about that type of stuff, but I enjoy it. You know what I mean? So it's always nice to come across other investors who like-minded. Like he owns a lot of, let's say, yeah, there you go, Amazon, Alphabet, Uber, like 3 of my picks. You know what I mean? Like, we own the same stuff. Obviously, we're like-minded. You know what I mean? I'll link his page in the description as well, by the way. You guys should check out Fred. He makes great content. Posts infrequently, but he's very smart. But yeah, thank you for watching. It says over here 44 minutes. We'll do this again. I did this on the Uber video. If you watch this far through, I want you to type pineapple in the comments. Or you know what? Let's do a different fruit. Let's do banana. Or how about this? Let's do any fruit you like. Do your favorite fruit. Yeah, why not? A lot of people are going to open the comments and be confused. Why is it strawberry, banana? What's going on? Should be funny. Yeah, genuinely, every YouTuber says it, but I'm being so serious. Genuinely appreciate you guys watching the videos. For your own good, I suggest you check out Finchat. Again, 100% free to just give it a try. And I'm sure you'll like it. If you actively manage your portfolio, you're going to find value in that website. It is a brilliant, brilliant website. It just so happens I'm affiliated by them. I genuinely think it's a great software. And yeah, should be fun. Looking forward to 2025. Cheers, guys.